Energy sector surges, up 3.36% this week, as bullish trends take hold, with a low RSI of 38, but looming supply disruptions could ignite a firestorm. This is what every serious investor needs to know about energy right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. This week, the overall market context is characterized by relatively normal conditions, with the VIX index at 19.2, indicating a moderate level of volatility. In this environment, the energy sector is standing out, outperforming the S&P 500 so far this week. The sector ETF, XLE, has posted a gain of 3.36%, which is a notable move. This sector deserves attention right now, given its significant weight in the broader market and its potential to drive returns for investors. As we delve into the energy sector, it is essential to remember that this is educational content and not financial advice, so please keep that in mind as we explore the trends and themes that are shaping this space. With the energy sector showing signs of strength, it is an opportune time to examine the underlying dynamics and assess the potential for future growth. Let us start with the technical picture and what the charts are telling us. The energy sector, as represented by the XLE ETF, has seen a notable increase of 3.36% over the past week, although it is still down 6.11% on a monthly basis. The RSI reading of 38 implies that the sector is currently in a somewhat oversold position, which can often precede a rebound in momentum. This bullish signal suggests that the sector may be due for a bounce, and the recent weekly gain is a positive indication of this. The trend direction is still somewhat uncertain, but the conviction is building, particularly if the sector can maintain its current level above key support. Resistance levels will be closely watched, as a breakout above these levels could signal a more sustained move higher. However, it is also possible that the current move is an extended overreach, and a period of consolidation may be necessary to rebuild momentum. The technical setup worth watching this week will be whether the sector can hold its recent gains and begin to build a more sustainable breakout. With the RSI reading and recent price action in mind, the energy sector appears poised for a potential rebound. Now let us look at the fundamental catalysts driving this sector. The energy sector is poised to be influenced by several key drivers this week, as we consider the macro tailwinds and headwinds at play, with the GDP advance estimate for Q1 2026 set to be released, which could have implications for energy demand. The sector, comprising oil, gas, renewables, and energy infrastructure, will likely be sensitive to this data point, as it provides insight into the overall health of the economy. Stocks such as XOM CVX, CUP SLB, and MPC will be closely watched, as their performance can signal the overall health of the sector. Earnings reports from these key players will be scrutinized, with investors looking for clues on the sector's profitability and growth prospects. From a regulatory perspective, any news or updates on energy policies could also impact the sector, as companies navigate the transition to renewables and energy infrastructure investments. The VIX, currently at 19.2, suggests a relatively normal market regime, which could support the sector's performance. The longer-term fundamental thesis for being positioned in the energy sector remains intact, driven by the ongoing demand for energy, the need for infrastructure investments, and the growth of renewables. As we assess the sector's prospects, it is essential to remember that this is educational content and not financial advice. Next, let us talk about the specific risks you need to manage this week. Risks and risk management are paramount for energy investors this week, as the sector faces a trio of key challenges, including supply chain disruptions, geopolitical tensions, and demand fluctuations. Given the current volatility environment, with the VIX at 19.2, position sizing is crucial, and investors should be cautious, potentially scaling back exposure to mitigate potential losses. Unexpected headwinds, such as a sudden change in global economic growth or an unforeseen weather event, could further exacerbate market uncertainty. To manage downside exposure, a disciplined framework is essential, including stop-loss orders, diversification, and regular portfolio rebalancing. By adopting a prudent approach, investors can navigate the energy sector's risks and capitalize on potential opportunities. And now for the strategic outlook, where does energy stand heading into next week? For the energy sector this week, we maintain a cautious stance due to recent volatility, with oil prices fluctuating around $60 per barrel. A key theme to track is the ongoing supply and demand imbalance. Please note this is educational content and not financial advice. If you found this video insightful, please like, subscribe to Financial Market Oracle, and comment your energy watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.